But Uli, we talked before the call about this. Would you say there's maybe too much positive already priced in the stock price of Amazon?
I think the question is really how do you value it? I mean, I see that they have a great growth and they're going forward, and they did everything right, like trying new things and AWS. I think if you just look at the pure PE, which might not be the right concept for those stocks, but already if they always can discover new markets and can grow, that would be fine. But if you look at what's implied in the valuation already, there's already something into it. So the question is, don't we see other cloud services coming up that the pricing for the clouds are going down? And might there be some point in time where people feel like the independent sellers, for example, in Amazon, that they don't want to rely on this? Doubtlessly, it's a great company. They did everything right. They offer a huge service for customers. Question is it a good company? Is it a good service? But can I still make any more money out of it? And that's the question which has to be seen now.
And how, Mark, how critically is it, or that kind of those FANG stops are that concentrated on kind of are most important for the performance of the index? Of course, you're not allocating the index there, but how bad could this be, kind of as a bad influence that it's that concentrated, those 5 or 6 stocks?
Yeah, well, in our portfolio, all these stocks are present as well. So that's not something I shouldn't tell. That's the truth, and we like them, and they helped us that year definitely. But we like to have diversified portfolios, and we like to trim positions when they go to be too big part of the portfolio. Therefore, that's the way we act. We trim these positions. We look for new names in the sector to also get more opportunities there. Therefore, the IT sector and the FANG sector in general, they are vital for us, but you have to be cautious, and that's all about it. You have to react quite fast if something is happening there.
Michael, as you already mentioned, you added more cyclical exposure on your equity side. It always seems, of course, quite tempting just to allocate tech titles, IT and healthcare. It's already kind of prominent in your portfolio. But as you mentioned, adding more industrial names, adding more cyclical exposure, why is it so important to have kind of the right balance in the portfolio and not only focusing on growth, even if Raj doesn't want to be happy or is happy with not focusing only on growth?
I'm with Raj. I think that the strategic positioning of having as much growth as possible to the best price possible is the right way. But it's just a tactical thing we're doing right now, or have been doing for a shorter time frame, to add a little bit more of cyclical exposure. Because when it comes to FANG and the classic structural growth stocks, there's no way to avoid them. But as an equity investor, you need to have growth in your portfolio. We have to structural growth. We have to have good business models that are well entrenched, they're well thought through, that have quasi monopolies, like, for example, Facebook with their platform, or the Google with the search engine and so on, and have new ideas like Waymo, Google with independent driving and stuff like this. You need this kind of companies, and most of all, you usually find them in the US and not in Europe, not in Germany. There's also some companies, but not that much. So overweight US, overweight growth, overweight digitalization, structured growth is the way to go forward in order to have a portfolio, equity portfolio that could be successful.
We're talking about the last years, always again about how much can like Amazon, Google, Apple, and so on grow and grow and grow anymore. Thomas, the Corona crisis, would you say that this would be another big catalyst for those stocks, as Raj already mentioned, kind of people in the whole world discovering all those stocks and all those companies and pushing kind of the stock price with this catalyst now in the future?
Yes, I think so. Because if you think of important questions for our society or for every society, and also of course for an investor, then these questions are maybe how do we want to communicate in the future? How do we want to share information in the future? How do we want um, to do shopping in the future and so on? And if you look at the answers, then these answers we need to the tech sector. And another reason why we are invested a large part of the portfolio in technology is that we like companies that have strong and successful business models, strong management, that show growth in earnings and revenue, that have a low debt situation, that maybe have an interesting valuation and also interesting dividend yields. And if you like that, you will come automatically to start in the technology sector.
Of course, the FANG stocks are always in the headlines, but Raj, you already mentioned there are like growth stocks beneath kind of the FANG surface. Kind of where do you find those stocks, and would you say those are maybe even the better place to be because they have potentially even more growth than those FANG stocks?
Yes, absolutely. So, for us, we've actually taken out Alphabet, Google altogether. We don't own Twitter or Snapchat. A lot of the social media companies, which depend a lot on online advertising, we've taken out altogether. And some of the newest things that we've been adding in the global equity portfolio, for instance, will give you a sense of where in the technology space we see the next legs of growth. And then also just, I'd like to say, we're outside of the technology space where there's some really exciting innovation happening. So in the technology space, we've added in the first quarter of this year, 2 companies that are both cloud-based services for other companies. One is called Dynatrace and the other is called CrowdStrike. So that's the kind of areas we think are going to show better growth. And why not? Many of the companies we're talking about in the FANGs have hundreds of billions of dollars of revenues. It's much harder to show a high double-digit growth when you're at that scale. But clearly for the companies like Dynatrace and CrowdStrike, you can have many years of high double-digit growth ahead of you. But also, I want to just throw in medical technology, medical innovations, because think about the healthcare services all around the world. As we were aging in Europe and America, and as the middle class, there's a growing middle class in emerging markets, so the desire to spend more on healthcare has been there. In China, they were improving their spending on healthcare as their population ages. They've got a dramatic aging population issue because of the one-child policy. We think after the pandemic, and as Ulrich was saying, that might be several years, we think healthcare will keep rising up the budget priorities in most countries, and especially in China. So we think there's great opportunities to create better solutions there and address or create entirely new markets there.